Today we're going to be going over October 2024 versus October 2023. We're also going to look at September from this year versus October from this year. What's happening in the market, long stretches of time versus what's happening in a really short window. And we're going to compare the whole market from Dauphin Island, Alabama to Panama City, Florida. Since we're in post-election, we're going to look at what the effects that short-term interest rate drops are having and how that's affecting the bond market, which really infects the 30-year mortgage. So let's get started. Angelo DePaola, the Coastal Connection with eXp Realty. And we'll start right in October of this year versus last year. In everything north of Gulf Shores and Orange Beach, what we consider a traditional real estate market, sales prices were actually up. And this has been kind of a trend all year. Prices have been up. They're up 6.1% to $433,000. I just think about 10 years ago when I started where we're at today versus then. Days on market up 38%. Look, we have known that this year was tougher than last year, so we know that days on market is going to be up overall. Will we start to see that go down a little next year? We do think so. 30-year mortgage rate should start to drop, should bring more sellers into the market, should bring more supply, and it also should bring more buyers, which will bring some more demand, and we'll see transaction count go up. Transaction count for the county was up 8%. 391 sales closed. What we call resort-based market in Gulf Shores and Orange Beach. Average sales price up 8.6% year over year to $773,000. Average days on market up almost 100%, 93.9% up. 120 days is your average day on market here. So we had gotten really used to selling stuff in a month. Now we're looking at roughly 6 months. Number of transactions down 10%, 133. So what's October look like versus September in a month-to-month comparison? All right, total transactions for Baldwin County, 8.9%. Orange Beach, 60% more transactions. Gulf Shores, up 23%. Average sales price in Baldwin County was up 6.7. Up in Orange Beach, 18.6%. And down in Gulf Shores, 2.7%. We're seeing it kind of come back up. What happens is, especially when you get a month like August and September and it's slow, you get pent up demand, and quite often it releases all at once. So you'll see this kind of bump. My guess is we'll see that happen in 2025 and even more so in 2026. You know, I always like to understand what's going on in our market versus other markets. And so we're just going to go percentages and total transaction. Dauphin Island flat. Gulf Shores up 26% in total transactions. Orange Beach year over year 23 versus 24 up 6.9%. And the average sales price in Dauphin Island up almost 50%. Gulf Shores up a little over 15%. Orange Beach up close to 10%. And then we look at the same kind of data for Perdido Key. Total transactions up 8%. Pensacola down 20%. Destin down 35%. 30A area down almost 27%. Panama City down almost 18%. So average sales prices, Perdido Keys up almost 25%. Pensacola Beach up 2%. Destin down 18%. 30A up 15%. Panama City up 3.41%. The people that want to sell, they're quite often, because mortgage rates have been high, they need more money today to make that move over to the next thing. And I think that's what's kind of keeping prices buoyed up. And a lot of those people haven't put their property on the market because they can look out there and go, I can't get enough. I can't get enough for what I need. And then there's buyers that say, I just can't afford more. So as we start to see the 30-year mortgage rate go down, we will see more properties come on the market. We will also see more buyers coming into the market, right? There's people that just took a break. It's just like anything else. If you're looking, you're just going to get fatigued. We see it all the time because I deal with so many people. We've seen interest rate cuts in September, saw October 25 bips down. They're predicting another 25 bips down in December, right? So, but what happened? What happened when those short-term interest rates went down? You'd have thought the mortgage rates would have gone down, but that's not how it works. And actually, if you traditionally look, as short-term interest rates go down, the 10-year treasury goes up. That's what mortgage rates attach to more closely, because we got to finance the debt. We looked at both presidential candidates. Both of them were looking at running deficits, right? To create interest in the bond market, which is how we fund what we do in this country. Rates went up over there to keep that attractive. Then you saw consumer sentiment also went up, especially after Trump got elected. Consumer sentiment shot up. You saw that play out in the stock market. Everything went on a run. Crypto, S&P 500, all those major indexes ran up. They tend to do that for about a year. After about a year, people realize that what happens in these elections, a lot of it doesn't to get executed at the end of the day, and the frothiness dies down some. What we're going to see, at least what the Fed tells us now, expect rate cuts every other opportunity that we get. We should see one in December, and we'll see this rate slowly come down. We're going to unwind this a little bit and hopefully come in on the soft landing. If you have any questions about your property, what it's worth, if you're out there looking for something and think that me and my team may be a good fit for you, reach out. You can DM us. Catch you next time.